Good evening, everybody. All right. We still have kind of a divergence in the charts. Today, as you can see, we had a strong bullish day in the Dow, almost in the oversold area, doing a bullish harami, and maybe at a perceived trend level that might be acting as support. But the important factor will be to see how they open the markets tomorrow. Now, I say the Dow is acting strong, but we can see more on the graphics of the charts that the NASDAQ opened at the T-line and traded lower after this reversal. So we could see all the clues that things are starting to get a little bit weak in the NASDAQ. First of all, they had the gap up, then a spinning top, then an evening star signal, then a bearish signal, a bearish engulfing signal coming back down below the T-line, stochastics heading down. So where would be the first likely target? Probably right in here at the 34. Next target, back in the gap area coming down past the 50. So this all kind of led up to where you should start looking with the overbought condition and indecisive trading. Start looking for some short positions. So the reason I'm stressing this is this weekend, if you did the mini session on when to take profits a couple weeks ago, this is going to be a much more detailed, advanced training on when to take profits based upon very obvious candlestick sell signals or obvious candlestick sell signals right at resistance levels, or a session like this where you could see it was starting to roll over. There wasn't really a confirmed sell signal below the T-line until over here. But we could at least make the assessment based upon the graphics of the signals that things are starting to get a little bit weak up here. So this kind of gets us prepared mentally and visually for getting ready to take some profits, because with this analysis right in here, the bottom line assessment would be the probabilities are starting to go against us as far as being bullish. Let's see. Is the doji on the NASDAQ at the top called a spinning top? It doesn't matter what you call it. That's a doji, that's a spinning top. A spinning top is basically a doji with a little bit bigger body to it. And it doesn't matter what you call it, because it still represents the same thing, indecision between the bulls and the bears. The transportation index did a bullish harami. The stochastic's not quite in the oversold area. So we still need to see a little bit more confirmation of a reversal. It might not be here yet. So in these type of market conditions, this is where you want to be able to analyze the overall trend analysis of the indexes, because at this point we're not seeing exclusive mass selling in the markets, and we're not seeing any mass buying. So it still puts you in a situation where your individual stock chart scans are the important research. What is the link for the weekend training? Hold on for a second. Let me see if I can find it. Hold on for one more second. Let's do this the right way. See if Abe will get that to me. Yeah, that's the general one. I'm going to see if Abe can get me the right link. Okay. All right, so we don't disregard the fact that there's some very strong buy signals. Here's your inverted hammer right smack dab off the 50. This is why we recommended LHDX this morning. All right, it says the okay, yeah, deleted. Guess I put the wrong one on there. Whoops. Maybe Abe did send me. Here it is. All right, what's that one look like? Is that an inverted hammer with bullish confirmation? Yes. There's your inverted hammer. This one. And then if they open up positive, from my research, and again, this is nothing official other than what I've observed over the last 30 some odd years, that if you see an inverted hammer, especially in the oversold area, and it trades positive the next day, you've got a you've got a 95% probability or greater that you're going to be in an uptrend. A 95% probability or greater. Okay, hold on. Let's see what's going on here. Yep. Okay. That's not where I want to be. Now I don't even know where I am. There we go. Okay, so yes, this is one of the 12 major signals. This is back to Matt's question. This is one of your highest probability reversal signals. 95% or greater. That's the inverted hammer, one of your 12 major signals. Now, you also have a very good stop for this. If you take my word for it, which you always should, that if this opened positive and traded back below this level, you close it out, because that means it didn't work. But that's going to happen very infrequently. Anytime I see an inverted hammer, bullish confirmation, that's why this was recommended. All right, it seems like the page is down. He's working on it. Okay, now we recommended Cano today because had it opened positive, you could see the J-hook pattern right off the T-line. Well, it didn't do it. Please make your candles small like that. I had to come in through back door. All right. I didn't know we had a back door. So you had a J-hook pattern. Now, if this trades back up above this level, it's pretty much telling us our J-hook pattern is working. Same scenario right here. Had this opened positive and traded positive, there's your J-hook pattern right off the T-line. Bullish harami right here at this level. You can still buy this, especially if it comes back up through the close of Friday. The whole site is down. Oh boy. And traded positive. I don't think it opened and traded positive. We can find out by going to the 10-minute chart. Well, did the 10-minute chart start? That's the 5 minutes, that's why. Did it trade positive early? May have. Anyways, it still is in this J-hook mode because it didn't close below the T-line. So if it opens positive and trades positive, you can be buying it. Now that J-hook type pattern, as we saw coming out of the this level on ATR, told us we got a strong chart. Now they gapped it up and they took it up. You want to be very careful at this point. Ray, Abe is saying that the whole site is down for some reason. So you keep an eye on this. If this opened lower tomorrow, I'd close out the position. It needs to open and continue to trade positive from here. So we're going to go through these real quick. These are the reasons we were buying. Look at your Morningstar best friend gap up. And from that point, you never had a sell signal and a close below the T-line. You actually had additional support when it went up through the 50. Still fry pan bottom, J-hook pattern on AEHR. Nothing to do here, just stay long. So this is the nice thing about the T-line is once you see a buy signal and a close above the T-line, you can see our inverted hammer, doji, Morningstar signal off the T-line, J-hook pattern up through the 50. where do you think the next logical target's going to be? Up here. And we started buying this one today. Look at your double doji type setup right here. That's your breakout area. So what can we anticipate by this buildup of investor sentiment? Wave 1, wave 2, hopefully wave 3 is the same magnitude as wave 1. Because of this pattern setup. I always like to use the patterns, because not only are they going to give you a higher degree of probability of being in the right direction, but they usually give you a very strong magnitude of move. That's on Upstart. This is Alt. Same thing. You just stay long until you see a sell signal. So that works very effectively. How long do you stay in a trade? Until you see a candlestick sell signal and a close back below the T-line. Now on this one, it did a bullish engulfing signal today. Is it in the process of doing a scoop type J-hook? We don't know. You can always buy this back. You should have been out here. You can always be buying back here. Now this kind of alleviates that emotional factor. Say, oh man, I hate to close here and then buy back up here. That's terrible. Now, at least when you close out here, the probabilities were indicating, because of closing below the T-line, you could be in a downtrend. Now, this tells you could be back in an uptrend. So maybe you missed out on 84 cents of this trade. The probabilities are still in your favor that you're in the right direction at the right time without sitting in something that might have a downside risk to it. So, same scenario over here on Oscar. Notice that even though it's trading lower and choppy, it's never closed below the T-line. It can still be bought on positive trading, because what would that kind of indicate? The 50 is acting as support and giving you a J-hook pattern. And this one's been a nice one. Ever since the message, it's been in a 45 degree. Now that was a little bit testy right there. It failed at the 200. It pulled back. The criteria at that point would have been, if it opens lower tomorrow, you close it out. Fortunately, they gapped it right back up, doing a Bobble breakout, keeping this 45 degree intact. So you can, every time you can add all this together and say, all right, I've got a Bobble breakout, I've got a kicker type signal, I'm still above the T-line, I've broken out. The more pieces of information you can put into your analysis to tell you the bulls are in control, the better the probabilities that you're in the right place or you're getting in at the right time. Same scenario here on Excel. They could never really close it below the T-line, and you can see the pattern setting up. Another little J-hook. Next expected target, eventually the 200. Okay, that's the longs. The shorts have been working well. Big bearish signal at the 50. They couldn't get back up above the 50, and then they closed below the T-line. If you just remember the T-line rule, the link is working now. All right, good. Hopefully Abe fixed it. Anybody else in the link working? So right now you just stay short. Now if this opens lower tomorrow, what do you got going on? A bearish doji sandwich, bearish J-hook pattern, implying a lot more downside. Dollar Tree. The bigger the signal, look at that kicker gap down. Now look what you got going on. Another bearish J-hook pattern in progress. If this trades lower, you could still be shorting it with the expectation you might be seeing another wave of that magnitude. Land's End, when it broke this level with a gap down, that told you this support level, the fact that they can't get up above the T-line. All right. When they can't get back up above the T-line, the probabilities are extremely strong. You're still in a downtrend. So what we're going to be working on this weekend is what is the difference between selling when it's time to sell and going short. And these are the situations we're looking for to say, all right, I might be taking profits here because I don't know which way it's going from this point. What are my probability factors in here? I don't know whether it's going to go up, down, or sideways. The stochastic's heading down. You've got a dark cloud, not below the T-line. But I asked myself that very simple question. Is this the best place? Okay. All right. And he made some changes. All right. So this is when you sell, taking profits. This is when you go short. We saw that same scenario over here. When you have a bearish kicker signal closing below the T-line, it tells you probably got a lot of force to the downside. Bearish kicker signal on ADCT still has not been able to get back up above the T-line. And does every good trade work or every good signal work? Obviously not. So on something like Ruckus, where it opened lower and was trading lower, that's what it should have been doing. But as soon as it came back up through the open, what color was the candle turning? It was turning back green again. That's giving you a little bit of warning. They're not selling it off, that you might say, all right, this is too much strength. Let's close out that short position. This is the process for cutting your losses short and letting your profits run, which is much easier to do when you're using the candlestick graphics. OPCH, there's that gap down. You want to stay short on this one. PTC, let's get rid of that. This is, some people will say, well, why do you have the 34 on here versus the 20? Because the 34 works relatively effectively. There's your bearish left-right combo, little shooting star. You can see how the 34 was acting as resistance, and then they closed it below the T-line. What's your trajectory? I'm telling you, this downtrend is probably still in progress. So you're constantly improving your probabilities based upon seeing the hard sell signals. Just puts you in the right place at the right time with a much higher degree of probabilities. MLCO, evening star signal. Where did it occur? Right here at the 50. And then the next day they took it down below the T-line. That's where you could have been shorting, confirming this signal, as well as telling you the T-line and the 50 were not acting as support. They're now resistance. Where do you think this one's likely to go to? Probably coming back here to fill this gap. Stochastic's heading down. Now, that's where it's likely to move to. That's what we can view. They always kind of come back and fill the gaps. We know if the stochastics are heading down, you're selling off. and after a sell signal in the overbought area, you're probably selling off. Does that necessarily mean it's going to go down? No, but the probabilities tell you they're heading down. There's going to be situations where what looks like a good short suddenly changes. And so what we're basically trying to do is put the probabilities in our favor by getting in positions that look like they should be working. And when they're not working, we can assess that pretty quick, say, oh, we better cut our losses and go on to something else. Now, this is Las Vegas Sands. It was trading up, and I don't know whether it was trading up because the reports of all the football betting was acting well this year. Oops, I think, oh, and we also recommended going short on SFIX. You can see the trajectory. You can see the close below the T line. If one sell signal tells you the bears are in control, two sell signals tell you definitely they're in control. All right, so let's go through a few charts right now that had prospects. So here it was a Bobble breakout setup on ARVL that came up, looked like it was going to come up and do a Bobble breakout. So here's your strategy, or here's your game plan. If you bought on positive trading, or if I bought on positive trading up here, and up, I got a good Bobble breakout, and it closes back here, where am I as far as the Bobble breakout? It didn't break out. So if I held on to this, what is my only strategy at this point? It has to open positive and trade positive. If it opens lower and starts trading lower, showing weakness, what's it telling us? The 50 is still acting as resistance. Close it out. It's much better, and this is what kind of has saved my bacon through the years after learning candlestick analysis, that I would rather take that small loss quickly and move on to something else than hope for it to turn around and do what I thought it was supposed to do. And when I say when I'm hoping or I thought it was going to do something, I finally realized that if you just let the chart tell you what it's doing, you don't have to have that hope or that your self-analysis of something happening. You're now seeing exactly what's happening. And that's basically what candlesticks are, is the graphic depiction of everybody making a decision at that point. Now here's a good looking chart, DOCN. This was somebody pointed this out in the chat room. This is the nice thing about having a chat room where everybody's kind of looking for the same signals and patterns. There's your doji sandwich J-hook pattern, kind of your classic pattern. So if this is a wave 1, hopefully wave 3 is taking you up into this range. This is what produces high probability trades in the right direction. And if you're an option trader, just improves the probabilities of not only being in the right direction, but being in a trade where the magnitude of the move is going to make a good profit over and above what you're paying for a premium on that option. Oops, I've lost my cursor. There's a nice fry pan bottom. You can see how it pulled back. Couldn't get back below the T-line, so now you can see you've got that little classic pattern. Where do you think the first target is? Right here. Where do you think the second target is? Filling that gap. So if it goes through the 50 and heads up here, that pretty much tells us, well, the 50 is not acting as resistance. That's kind of the same. You'll probably see this recommended tomorrow. When you see a pattern breakout, that implies there's still a lot more upside. Pump, there's your Bobble breakout. Why is that more effective than just a regular J-hook pattern? Because if it was a J-hook pattern without this 50, we could see that it's a J-hook pattern. And it's supported at the T-line, which nobody else has on their charts. The fact that it is breaking out through the 50, people aren't buying this because they see a J-hook pattern. They're buying it because they see it's got through the 50. We already know what to expect if it goes through the 50, because everybody else jumping in, completing our Bobble breakout pattern. So a Bobble breakout is a little bit more intense than just a mere J-hook, because it's breaking out through a level that everybody else is watching, and if it does, they're all jumping in because they see it broke out through that level. So here's IMNM, fry pan bottom. There's your little dimple. There's your gap up through the 200. You just stay long on this until you see a sell signal. Okay, and here's one that everybody was asking about all day. So this is where if I saw this trading right here, up a good, that had been up at 80% or so, coming from 520 to say the 680. What's the first hesitancy of most investors? Oh, I don't want to be chasing this. It's already up huge. The problem with that scenario is it was up huger. So what would make us decide whether to buy here? Well, first of all, I'd go real quick to the news to see what the news was. And I did. I can't remember what the news was. I think they got approved on something. But the next step is I flip to my 10-minute chart. And if my 10-minute chart says up, they're still buying, and there's nothing showing any selling, okay, I can buy right in here. Would I buy up here? No, it looks like they're backing off. We don't know whether they're going to back it off here. But they back it off and they start back up above the 10-minute T-line. I can be buying here. I can be buying here. Would I be buying over here? No. Would I be selling over here? Not quite yet, because what did our daily chart look like right in here? It was still way up here, still a very solid bullish candle. So that's just a very easy process to say, would I be buying here? Let's see what the 10-minute chart is. Buying here, let's see what the 10-minute chart is. John, I use Thinkorswim, and they've got a news thing right on there where I can just go and click and type in LIFE, click on it, and it will show me what the latest news reports were. See if I can do that real quick. Oops. So over here, right on this line, it says live news. So if I type in LIFE and then click on this, well, there was a bunch of news today. And it says shares of TR Pharma up over 41% reports data from it was even. So here's all the news items that occurred today. It was up even more, 1091. So is there a safer way to play something like this while I'm here? Yes, you could go and say, all right, let's say the 750 options early in the day must have been somewhere around 55 cents. See, these were up, what was it up? Up 305. So they started, the 5 started at around, looks like $1, $1.50. So do I want to risk a lot of money Maybe I just come in and buy the calls with less money exposed. Anyways, that's just that process. All right. RGNX, there's your fry pan bottom. There's your bearish candle, kicker type signal, breakout. Now you can look for a 45-degree off of here. Darn. I was going to type in, oh, there it is. Couldn't remember. Looking at the same thing right here, this just had a different signal. That had your message and then the message confirmed, coming out of the same type of pattern. Okay, the oils all acted well today because crude oil was up. So which one do you go after? There was lots of good bullish signals, but look at your little trend kicker bobble break, not bobble breakout, but J-hook pattern on P10. Or tallow. There's your J-hook pattern. So there's going to be stocks that were trading higher, but the ones that give you better probabilities are the ones that are actually creating patterns. Yes. So if you went to your 10-minute chart, maybe not buying here, maybe not buying here, but when it came back, where did it support? Right on the T-line. You could have been buying in here. Because what did that tell you? That after a strong move, they weren't selling off below the T-line. You could just stay long. And ENLC, whoops, wrong chart. ENLC, another fry pan bottom, and look where it broke out. Bounced off the T-line, off the 50. What did that tell you about the 50? They weren't trading it back below the 50. Now, we can see immediately that they weren't trading back below the 50. What does everybody else watch? They're waiting to see whether it supports at the 50. They're starting to jump in here. We could have been jumping in a little bit earlier than everybody else because we could see they already were supporting on the 50 with a bullish signal. On TVTX, if I was watching this and I saw that it was starting to trade up, I might be trading in here or buying in here, or I would have waited to the next day when it was trading confirmation. Because what did this tell you? It told you that profit taking was over. And what was the message? The message was they wanted to get in with great enthusiasm, and there was profit taking. Now we can see the profit taking's over. Just a very simple analysis. Did I do this one? Yes, we did this one. All right, so on the short side, now why would that not come up? That's just a fine how to do. All right, so this is what we're going to be analyzing Saturday, is when would you take profits? Maybe you start taking profits in here knowing that it was coming back to the T-line or back to the 50 and the T-line. So you're in the overbought area, stochastics starting to roll over, you're starting to see some selling. You close out the trade, because where can you buy back? As soon as you see if it's going to do a J-hook pattern. Now look what they did. And this is kind of the step-by-step. Oh, maybe that was it. All right. On Cozy. All right. But what did this tell us? Now here's just a very simple observation. Is that a sell signal? No, that's not a sell signal. That's a down day and an uptrend. They took it back up. Is that a sell signal? Yes, that's your dark cloud in the overbought area. So if you see selling, that doesn't really tell you all that much. But a couple of days later, you see a sell signal. That kind of puts the nail in the coffin that the sellers are in control. You might be closing out the trade there and going short on this day. Oh, I forgot to do the biggies. I went right by them. So Amazon, same scenario. Came up through, came back up, and then there's your sell signal again. Where are they likely bringing it back to? This area. So what would you be doing with Amazon right now? I would have been out of it, and I wouldn't be long or short. It's at the support level. Now, if it opens lower and starts trading lower tomorrow, you could probably be shorting it. NVIDIA. This is right about in there. Is you had the potential, had potential, but you started seeing indecision up here. And what was the final nail in the coffin? Kind of had a bearish left-right combo and a close below the T-line. That told you if you had any long position on, you should have been out of it here. That's telling you that things are going against you. Adding all that up together. Netflix, evening star signal. Anytime, first of all, again, this is what your analysis should be. We're going to go through this step by step Saturday. When you see a gap up in the overbought condition, what should you start looking for? Sell signals or selling, especially in the overbought area. And if you're a little bit away from the T-line and you start seeing selling, where do you think your first target's going to be? Back down here. Alan, yeah, we'll get, when I tell Jim to do the double line, throw you in your individual ones. So Zeus, there's your dark cloud. Didn't really confirm. I would have probably, I wouldn't even have closed it out because you could see they couldn't close it below the T-line. Opened at positive today. Where was your stop on this one? Right there at the T-line and the low of that doji. Because logic says if they come back down through the low of the doji, it's creating a bearish engulfing signal. And if they're coming down through the T-line, you got a sell signal and a sell signal, it's time to be out of that trade. You could have gone short today, or, which we'll be recommending tomorrow, if this opens lower, what do you have going on? Dark cloud, bearish engulfing signal, now a bearish doji sandwich, and where do you think a likely target could be? Well, if this is one candle, 3 candle could take you all the way down to the 50-day moving average. So this is where you use your 2+2 analysis. Get rid of that. And add everything together. Now we know that if it opens lower, we've got another signal, the bearish doji sandwich. Apple, nothing there. Another one where you would have had your safety stop at the T-line. Yeah, 2+2 is merely saying you add everything together. You get a bigger number, a bigger reason for that trend to be working in that direction. And what was the other big one? Tesla. Now Tesla is a toughie. You can see the almost a hanging man, but not quite. Then you had a doji. Then you had a bearish left-right combo that closed below the T-line. Then it traded off hard today, but came back up above the T-line. This makes it very simple. If it opens positive, obviously your uptrend is still in progress. And where would you put your stop if it opened positive? Right back here below the T-line and the doji. On the other hand, if you're long and it opens lower tomorrow, what did it tell you about the bulls? They couldn't continue it, close out the trade, or even possibly go short. That's, yeah, long-legged doji hammer type signal. All right, now we're back over here to the shorts. So anytime you see that was not quite a sell signal, but it sold off right to the T-line, supported. But that was a sell signal. So what did this tell us? They started selling, they tried to take it back up, and then they had a sell signal that closed below the T-line. Just logic says, who's winning the war here? The bears were. You should have closed this one out. Now, could you anticipate them gapping it down? Definitely not. Because of the announcement today, they got terminated as far as providing COVID vaccines for the UK. Now, that might still have a lot of downside pressure, but there's a teeny gap right here that would coincide with the 50-day moving average. So if this opens lower tomorrow, you could be shorting it with an intention of it or expectation it's heading back down to the 50. AXTI is just a good example of if this is your resistance level and you see a bearish engulfing signal at that resistance level, close out the trade, going short. Or if you saw your double doji and then it opened lower, what's your doji rule? It's going to move in the direction of how they open it after a doji, and they gapped it down. That's where you can put yourself in high probability big trade setups. That was the same scenario on, oh, how can I forget this quickly? Was it Green Sky? Yeah, there's kind of your double doji setup and then a breakout to the upside. So that double doji is relatively informational for you to give you a high probability trade setup. So this is observe the obvious. They took it up. They didn't confirm. Didn't confirm. Didn't confirm. Now you have a bearish left-right combo. This is why once you've learned your signals, then you've learned your patterns, then you learn your top rank signals and patterns. Remember, a left-right combo doesn't need confirmation. And in this case, it didn't need confirmation because look where it closed. Closed below the T-line. So a left-right combo is a very strong reversal signal, not requiring confirmation. But if you've been long hoping that it was going to pop up, when it closed here, you close it out. That told you definitely the probabilities have gone against you. Bearish left-right combo to bearish J-hook. Could be a bearish J-hook, yes. And it's strong enough to say they're selling it off. You could be still shorting this on weakness. This is observe the obvious. You're in an uptrend, you're in an uptrend, you're in the overbought area. And then they do a shooting star failure at the 200. If I was long, I would have closed it right here. Because what did it tell us? It told us they were running out of steam and they weren't going to go through the 200. Why weren't they going through the 200? Because they could see what was happening here at the 200 and they were taking profits. We could see that that was a sell signal. Now it becomes a strong short. Apparently it may have been earnings or something. Because of the gap down from a shooting star doji, what's that tell you? You might be heading down to the bottom of the channel here. Notice that signal right there. What is this signal right here? Anybody? There you go, Marshall, thank you. That's a nothing. Now, if I had been long, that's where my stop would have been. Because if it came back down through there in an overbought condition, where do you think the target was? Here. You could always buy back on the next confirmed buy signal. Well, it never confirmed. Now what did it tell us? We had selling, but it wasn't a sell signal. 3 days later, we had a big bearish engulfing signal. Who do you think has won the battle here? You could be shorting this with the expectation of coming back down to the 50. Bearish engulfing signal, I think. Looks like it. Bearish doji sandwich. And then if you see the market is selling off, now in this case it was the NASDAQ selling off, and you see that something that's had a sell signal to close below the T-line selling off, that becomes a high probability trade setup. That's just putting 2 plus 2 together. Rolled over. When it came down through the T-line, where do you think the next target was? Back down here to the 50. Whose handwriting is this? Here's another, well, not so clear on here, but the fact that they did kind of a Harami doji lower open, where do you think your next target is? Somewhere down in this range. Observe the obvious. When it came back up to the 50. So if you're buying right here, look at your McMuffin. Morning star signal followed by a doji sandwich, or your morning sandwich. Where do you think the next target's going to be? Well, here's target number 1. And what did they do at target number 1? They blasted right through. Where's your next target? Where everybody's watching at the 50. Now what do we see up here? Looks like a failure. Well, they took it back up. Maybe another attempt. Yep, a hanging man signal. Then a doji. By this point, in the overbought area, what should we be looking for? It better open positive and trade positive. When they did this, that told you you didn't have to really see it close below the T-line. Close it out. The trajectory after a resistance level right there, that's pretty much telling you what's happening. Stochastic's rolling over. It's time to be out of this trade. Then if they open it lower, you could be shorting it. This is what we want to get everybody acclimated to this weekend, is finding something like this and saying, all right, what should we be doing here? If I'm long, I'm getting ready to close out the position if it opens lower. Yeah, it opened lower and traded lower, close out the position. Now what am I looking at? Looks like they failed at the 50. Stochastic's rolling over. If it opens lower, this is what we want to get everybody prepared for that being in the right trade at the right time at the optimal right time. Failure right at the 50 on EH. I think it's one of the airlines. Where do you think this one's going to? Play back here or down here? The bigger the signal, the more compelling it is telling you that the bears are in control. Looked like they tried to bring it back up. I would have been a buyer maybe on positive trading the next day. But look where they opened it. Another little simple rule. You've got a big bullish candle and the next day they gap it down below the previous day's open. You can pretty much take it for granted that they are not buying this one. They're still heading out. For bullish and bearish engulfing, do wicks matter? No. You're only buying a bullish and bearish engulfing is only the body, not the wicks. Okay. So there are a lot of bullish charts in, let's say, the oil sector. But what do we do to improve our probabilities, finding the patterns? But wasn't that an inverted hammer? What one were we looking at? What one there? First of all, were you in the oversold area? And secondly, if you have a bullish candle and they gap it down below the previous day's candle, no, that's not an inverted hammer. That's just a bad hair day. You want to see an inverted hammer when you're, remember where we're looking for signals? We're looking for the signals in the oversold area or the overbought area. We're looking for pattern breakouts that usually occur in the overbought area. Okay, I guess that's about all I got. So the important thing that we're going to be looking at tomorrow is where do they open the markets? Ah. Oh, it is. So right now it's showing the market, the futures up 61 points. However, look what it's done after hours. Came right up to the 50 and now selling off a little bit. So you got to be careful because we didn't quite get to the oversold area today on stochastics. That leaves a little bit of doubt of whether this was just a bounce versus a reversal. All right. Are there any general questions on candlesticks? All right, if not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. That's a good chart on CDEV. You can stay long on this. You could even be buying because look at your little trend kicker breakout. MMAT, you're now in that indecisive stage. If I was long, it would have to open positive. If it opened flat or traded flat, I'd close it out, waiting to see whether it's going to go this way or this way. The Russell tried to come back up, but look at where you are as far as stochastics wise. Be a little bit careful. This may just again be a bounce once it hit some of the support levels. GM. That's okay. I probably wouldn't buy it. But if you like it, you can buy it. Let's see what Ford has done. Ford trying to come back up a little bit. MYOV, stay short. expect it to come back down to test the 50. Micro, bullish engulfing, right smack dab off the 200 here at the in the oversold area. If I was short, I would have covered the short positions, but I wouldn't be going long yet until they can get up through the 50 and the T line. OCGN, not a reversal signal, but you did have a bullish engulfing. You could be buying this one. Obviously, you want to get through this level again. It's not a clean chart. See what it looks like. Humbug. Still has to get through this level. Fiverr, that one I'd be more apt to buy because it did do a bullish engulfing signal. Back into the gap area, I'd suspect at least coming back up to test the 50. Clean Energy, that one you can be buying because it pretty much held the T line and came up through the 50. Let's get rid of that. I wouldn't be afraid to be buying this one. And Box, I would stay short. Now, if it opened positive and traded positive and I was short, I'd cover it. If it opens lower and starts trading down, your figures are still heading for the 200-day moving average. Buy these if it open higher. Ed, no. You're still heading down on stochastics. You're still in a downtrend. It's not a chart that I would be going after on the long side just yet. Just because you have a buy signal, remember, you're not in the oversold area. So you still have to put all the stars in alignment. Bah. Joel, that's an ugly chart. I would probably recommend going short if it opens lower tomorrow, giving you a bearish doji sandwich with the expectation of coming back down to this level. But other than that, that's more of a bearish J-hook pattern setup. This one you could be going short. Observe the obvious. The 50 was acting as resistance, and there's a gap right down here. Right, that's where it's heading. MGNI, stay short. Home Depot. You can stay long on this. You're not going to make a heck of a lot of money with it. So you want to watch to see what happens once it gets here. Now, when you get up there, you're going to be in the overbought area. If it starts toying with this area, now you watch to see if this fry pan bottom is going to break out or whether it's going to resist at that level. Fastenal. If you're short, stay short. And MGM. You could get ready to buy this one. What did it do today? Open and close lower. So that wasn't a good strengthy move going toward the resistance level. If this opened lower tomorrow and started trading lower, I'd close it out because then it's sideways. NTMB, left-right combo or bullish engulfing. You can buy this one on strength. Archer Daniels, that one you could be buying. Another one that won't have a huge percentage move to it, but you can see it's heading in the right direction. First target right here. So that would be something more to put a option trade on NYCB. Try that again. NYCB. You could go long. Right here at that breakout area. Wouldn't be the best looking chart, but it looks like it's trying to break out into wave 3. REKR. That is getting ready to go short. Look at your shooting star signal. I'd be ready to go short with the expectation that if this opened lower, they failed at the 200, they're coming back to the 50. And Diana, stay long. Look where your doji sandwich occurred, right smack dab at the breakout level. Advanced micro, still not a good looking chart, sideways. If you're short, you can stay short, but if it opened positive tomorrow, that kind of puts you right back in this range. I would close it out, and that wouldn't be long or short. AMRS, nothing there yet. If you're short, you get ready to cover if it opens positives, telling you they did support at the 50. If you're short, it has to open lower and trade lower tomorrow to stay short. This one's turned into a little bit junky. I'm suspecting that it would, even though it's above the T-line, I would suspect they're now coming back to the T-line, and it doesn't make it for a very good trending chart if it does that. You are. Nothing there. Sideways, you don't really have any buy signals. I'd be someplace else. All right, that wasn't a whole lot for tonight. We started buying this one today. You'll probably see a buy recommendation on Green Sky tomorrow. And Pump has a Bobble breakout. Might see a recommendation on that one heading up toward the 200. Oh, got more. You can short this one if it opens lower. Oh boy, I don't remember which ones, but they aren't doing very well today. They were probably the October, I want to say October 40s. And they don't, I think after hours it was trading up a little bit more, but your stochastics are heading down. You're still below the T-line. You still have to give it the prospects or the probabilities that you're still in a downtrend. Same thing happened over here. We were short Bed Bath & Beyond, and then there was a day like this. So this is why I always stress, know what the signals are. That was not a signal. That was just an up day and a downtrend. All right, that could be. I just thought with the that this one was heading lower. Wynn Resorts bounced up a little bit today. Not anything tremendous, but wouldn't have been short this one yet unless it stayed lower. All right, that's about it for tonight. We were trying to find some puts on QFIN. but their puts were so thinly traded that better just to short the stock. So with that, all right, remember, it's going to be cold and rainy this Saturday, so you probably want to just sit and get all the intricacies of when to be going short or when to be selling a profitable trade when the probabilities say it's time to move that money and go someplace else. So with that, we'll see everybody bright and early tomorrow morning. We'll see you then.